Medical Properties Trust stock, ticker symbol MPW. This stock is down 26% year to date, which is an insane drop of course. And yesterday MPW presented some mixed results for the fourth quarter earnings. And most people love MPW stock because of the dividends, but they cut the dividend last time to $0.15, down from $0.29, so almost cut in half. But still, dividend yield is sitting at 15%. And with the stock coming down a lot lately and earnings just released, it is the perfect time to do an analysis. And I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does MPW do? Medical Properties Trust is a healthcare facility REIT. The company owns and leases healthcare facilities. The vast majority of medical revenue is generated in the United States. MPW reported a net loss of $1.11 per share and a 0.36 NFFO per share. And to be honest, this doesn't look any good. The fourth quarter net loss includes a non-recurring write-off, and this is very important to keep in mind. In here we see that revenue went down big time because of the straight line rent and interest. Expenses stay nearly the same. Thus results in lost income and also a negative earnings per share. The dividend is also cut in half year over year, so all of this worries me a bit already. However, the FFO is reported at $0.36 per share, which already looks much better versus the net income loss. But it is still down year over year, which is something that I don't like. And this is one of the most important numbers with REITs. We also see the write-off in here of $0.83 per share. And now that we know more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. MPW is a 2.23 billion market cap company. PE ratio is not a fair metric to use with REITs, so I'll be using the price to FFO instead. Right now it is sitting at 14.8, indicating they might be fairly valued. Later in this video I will show you my 3 price targets for MPW stock, so make sure to watch until the end, because price to FFO is only telling a small part of the full story here. Revenue is at 1.37 billion, and in this graph we see that revenue went up in the long run. However, most recently it's coming down quite a lot. We see that margins are going up and down quite a lot in the long run, but things most people are worried about is the most recent decrease in margin, and to me this doesn't look any good. EPS is going up in the long run. It is not really steady and consistent, but that is very common for a REIT. However, the most recent decreases is something that worries me a lot. Analysis expect that in the coming 2 years EPS will recover to $0.88 again. For the revenue it is not looking any good, with analysis expecting a decrease over the coming years. Return on assets is sitting at 3.3%, which is a low number, even for a REIT. Return on equity is also really low, and the most important number, return on invested capital, is sitting at 4%, which is again a low number. But it is slightly higher versus the 5-year average, so that's the silver lining here. Current ratio is at 2.26, which is a decent number for a REIT. Nothing special to mention here. Right now MPW has 10 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. MPW has 250 million in total cash, so they can't pay down a big chunk of their total debt. This is something that I don't like. So it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, which is a great thing. And to be honest, this surprised me a little bit. Shares outstanding are increasing, which is very common for a REIT, since they increase shares to raise capital. And when shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is still sitting at 15%, which is an insane number. But keep in mind, MPW did cut the dividend not too long ago. Annual payout is at $0.6 and payout ratio is at 46%, which is below the average for REITs, so this part looks good to me. The growth numbers obviously don't look great after the dividend cut. And in here we see the dividends paid since 2012. They used to increase the dividends at a decent rate. However, in 2023 they did a dividend cut, as mentioned before. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course, this is an estimation that can be highly impacted by results, but it gives you a rough indication. It's expected to go down from here. And overall these dividends don't look good to me in terms of growth and safety, but how about the historical returns? I decided to compare MPW stock with the overall market, in this case the S&P 500. On the 5-year chart we see that MPW underperformed the S&P 500 big time, with a minus 71% return, including dividends. The S&P 500 is sitting at a 95% return. On the 1-year chart it looks pretty similar, with MPW sitting at a minus 65% return. The S&P 500 is sitting at 26% return. On the 6-month chart it is again MPW sitting at a negative return. This time you're looking at a minus 42%, while the S&P 500 is sitting at a 14% return. On the 1-month chart it is finally MPW that is having a positive return, and they managed to beat the S&P 500 with 16% return versus 4% return for the S&P 500. So bottom line, MPW underperformed the S&P 500 long term. And with the stock hammered down quite a lot, it could be an interesting buying opportunity. So, is this the perfect time to buy MPW stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 0, 2 and 4%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 36, 38 and 40%. And for the free cash flow margin I'm putting in 36, 38 and 40 again. For the PE ratio I'm putting in 5, and for the price of free cash flow I'm putting in 3, 4 and 5. My desired annual return is 15%, since I can get an easy 10% average annual return with owning an ETF. Usually I put in 12.5%, but I want to build on a higher margin of safety here. Right now MPW stock is at $3.73. I hit analyze and we see a lot of green numbers. And since this is a REIT, I'm only focusing on the discounted cash flow value. We have a low price target of $4.56. We have a mid price target of $5.5 and we have a high price target of $6.8. To me, the low to mid price target is the most justified here, indicating that this stock could be undervalued based on these numbers. My final conclusion is going to be very short. It's a high risk and potential high reward play, and I'm not so sure about the reward anymore. Yes, they pay a 15% dividend, but how long is this sustainable? A dividend cut is never a good sign, and the company seems to be in big trouble with every earnings report they release. For me, it is a big red flag when I see all these numbers, and if you decide to go for it, please be careful. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.